Hey guys, how's it going today? So today we're going to be talking about NVIDIA. Now, I've never made a video about NVIDIA before, but today we're going to be talking about their earnings that just came out. And we're going to be talking about whether I bought this stock, where I think this stock's going. There's a lot to talk about on NVIDIA here, so I thought this would be a good video to give you guys a bit of an insight as to my thoughts on NVIDIA and what's going on. Now, of course, they had their earnings that just came in yesterday after hours. Yesterday, stock was down maybe about 3%, but today kind of paired those losses back. Now we're sitting about 180. So really, nothing really too much in terms of the stock price movement. I mean, year over year, we're up 43% still, right? This stock is sitting at all-time highs. And of course, this is a stock that if you've held it for a while, it's been uh, it's being a moneymaker for you for sure. So we're going to quickly go through some of their financials that I curated here for you guys. We're talking about Q2 2026. This is what they just released yesterday. Of course, their quarters are basically like a year off kind of thing. Kind of hate it when companies do this, but anyway, we've got Q2, we've got the last 4 quarters, and we've got the year over year here as well. I've also got the gross margin percentages, operating income percentages, and the net margins as well, so we can kind of see how that's transitioned over time. But this quarter, Q2, $46.7 billion in revenue. Now look at how that is progressed sequentially from last quarter. It's still up quite a bit from 44 billion, but year over year, we're looking at 56% growth rate. Gross margin was $33.8 billion. And what's interesting is to look at these gross margins. We're going to explain this as well. Gross margins has trended up a little bit, 72.4%. Last quarter wasn't so great, but we were looking at 73, 74, and year over year we were 75. And the question is, I mean, if you're not aware, why have we been seeing this? And this is what's kind of been hurting the stock a little bit. Why are we seeing this gross margin erode? Well, some of the reasons that we've seen is the big reasons. So NVIDIA has kind of their flagship, their H200 chip, right? They made a specific one, the H20, for China. And then basically, that's being restricted. And there's a lot of talk down right now. And that was basically a $4.5 billion write down in Q1. So, I mean, that's where we just saw that huge gross margin get just destroyed. Also, recently here, we've seen, as we all know, NVIDIA and AMD both are going to basically do sort of like a pay to play with the US government paying 15% of their sales revenues to the US government. Now, this really isn't in place too much. We're going to be talking about that a little bit later in this video. But basically, what you got to know about this is, this sale restriction and this geopolitical risk is what's really hurting it. They're still selling their H100s. They're still going on with that. I anticipate that they're going to progress with this. Basically, maybe just raise their prices on Chinese customers, and we're going to see this gross margin continue to increase. I mean, still, these are crazy. As of this quarter, 72%. That's like Apple services revenue, right? That's crazy gross margins, but we all know that's what NVIDIA is all about. Also, they had the production ramp of these Blackwell GPUs. It's costly, right? Operating expenses went up, the infrastructure, all that kind of stuff. And then China itself is encouraged, even though they're not really selling there right now, it's encouraged their businesses not to buy from NVIDIA because all of this geopolitical risk. Nonetheless, we've still seen that gross margin increase, but at a lower clip, right? And that's a very important thing to note there. Why the stock is potentially not going up as much as it could be. Why it's trading at a relatively modest valuation for what it is. Operating income was $28.4 billion, still huge, 53%. And of course, this one, the gross margin was up 50% year over year, huge numbers. But again, 60%, where we were seeing a little bit higher gross margin before. Year over year, we're seeing 62. I expect that to improve. But that hit to Q1, at least we've seen that improvement from that write down. Net income, $26.4 billion. That's up 59%. And we're going to go into valuing the stock a little bit later in this video. So keep these in mind, right? I mean, sequentially, we're up, but year over year, we're looking at like anywhere from 50 to 60% increase is huge, right? That net margin is at 56%, 56.5. And so we've actually seen that, it's pretty good. But the reason that that is good, and it's actually beating these other quarters, is that we had, and we're going to get into this a little bit here, we had an extraordinary item that came on the income statement. So if it wasn't for that, we'd probably be kind of be in line, because you might be asking, well, how come gross margins dropped, right? We can see comparatively from the last 3 quarters, operating income's dropped, but net income's up, right? So these are the kind of granularities that you need to look at. It's basically just an income that came in that was an extraordinary income that came after operating income. So that explains that there for you, because it actually is up as well year over year. But net income up 59%. EPS was $1.08. These were beats. The other thing is these were slight beats, like the revenue and the EPS. They were beats in terms of the street, but not huge beats, right? Cash, so that the EPS is up 61% year over year, and cash 56.79 billion. We've seen that grown up 31% year over year. So overall, fantastic quarter. But these gross margins and net margins are something to consider. Now, I'm going to get more into the valuation with like 1000x stocks in a bit here. But we're about 50 PE right now. But I mean, that's not the forward PE. But just to give you guys, an insight, we're not trading at 50 times earnings, but or sorry, we are trading at 50 times earnings. We're not trading at like 80 times earnings, but that's pretty low for tech. Some of the tech stocks. Like look at like Amazon, look at some of these other companies that were nowhere near where, in my opinion, NVIDIA is going to go. Even at a PE 80, I'm not saying it's going to trade at 80. We're looking at 280, right? But anyway, to get a little bit more granularity here in terms of their earnings here, I like this chart. Because basically it shows the data center, gaming, it breaks it all out, right? Data center was $41 billion. So those are their chips, right? For customers' data centers. Look at the year over year growth, and like sequentially, look how this has increased since Q3 2024. Gaming. Gaming's been doing very well as well. I mean, something very interesting. And what I find very interesting about gaming is when we're going to see these ChatGPT models going into games, and that was even touched on briefly in the conference call, right? That's going to be a game changer for gaming. But of course, we all know that the AI and the large language models are what are the main thing that everybody's excited about, right? Professional visualization. Auto's the only one that has, kind of floundered a little bit here, but still we've seen that sequential growth. So again, total revenue 46.7 billion versus 30 billion year over year, like just crazy growth, right? In terms of the income statement, like I said, we basically went through this. 46.7 billion versus a 30 a year ago. So gross profit, we went into this in a little bit of detail. We've seen that margin kind of go down a little bit, but I wanted to show this just to show you, look at the amount that they're putting in R&D, right? So that's obviously increasing the total operating expenses by a lot. SG&A went up by not a huge amount, but you got to keep in mind why these expenses are going up and why certain margins are being hit. Operating income was 28.4 billion versus 18, and here's this extraordinary item that I was talking about. Why was we can look here again, why was the net income margin, the net margin, better than a year ago? Well, we've seen this other income here, and comment down below, guys, if you know what that was. I didn't see a reference anywhere, and I have to really go through their financials, and I'm going to have to take more time to do that. $2.2 billion, right? So that made a big difference right there, right? And then we can see, of course, their net income down here as well. So that was the difference that made the difference, but still, amazing. In terms of their balance sheet, we'll just quickly go through it. Like I said, $56.7 billion, huge, very strong cash position. Long-term debt, they only got about 8.4 billion, right? And then the shareholder equity, we've just seen increase a lot too. So just fantastic balance sheet. In terms of their statement of cash flows, operating cash flow, I highlighted that there for you guys as well. And also something I wanted to mention was, how much they're actually purchasing of their common stock. $9.7 billion this quarter, right? They're still purchasing a lot before, but yeah, they returned, I think it was something like over $10 billion between dividends. We're going to get into that. and common stock repurchases. So even a company that's growing this quick, usually they kind of do it in the later stage, they're still buying back significantly and boosting that EPS, right? Um, so now quickly, I just wanted to quickly talk about this. In terms of the price, before we get into the conference call here, this is 1000xstocks.com. You guys know this from my videos. There's a pinned comment down below if you want to see if you can get access to this. But to show you why I'm in the stock, like why I think that there's still room to grow, just at a base case scenario here, like revenue growth at 10% for the next couple of years, right? And of course, these fiscals are off, right? 20% income growth. Like, look at what we were seeing before. We may not see these kind of, returns, but I'm being very, very modest, right? I'm giving it a 35 to 45. Right now, we're at like a 50 PE. So in the next couple of years, I could put it at $256 a share. That's a pretty base case scenario, right? So, and for a stock, is it that expensive, right? Like it's the 4 PE is like 45 on it, right? Um, yeah, there is definitely risks, and we're going to talk about that, but these are very modest. So I think seeing a 200 on this stock relatively soon, I don't think that's anything out of the question. That's for sure as well. So in terms of the conference call here, there's quite a bit that was talked about in the conference call. You can probably imagine what a lot of it was. As I showed, the data center revenue grew about 56% year over year. But that H20 revenue, again, that's the specific chip. That was like kind of like the crippled chip because of all the security concerns. The US wants to beat China, right? They want to beat them in AI, so they don't want to give them the best of the best H200, Blackwell, right? So they had about a $4 billion hit from that H20 revenue loss. So they said in this quarter they sold none to China. You saw how good this quarter was. They sold none. And they previously stated, like this was months ago, that it was roughly $8 billion in revenue. So like it's a huge amount of revenue that they're getting hit with, but still phenomenal quarter. They said that the Trump administration started issuing licenses in China, so that was in like late July. Like I showed you, that was 15% of revenue. And they did mention that a few select Chinese consumers have gotten these licenses, but they still haven't seen anything posted by the USG. So they haven't shipped any of these H20 units. They're saying if geopolitical risks subside, they should ship $2 to $5 billion in H20 revenue next quarter. So that's a pretty huge amount. But again, when we talk about guidance, they have not put this in their guidance. So that's kind of what I like about this quarter, is that they haven't included any of these assumptions whatsoever. They just expect that they're going to be locked out of China, essentially, right? And the CEO said that I don't know how specific these calculations were, but he's saying China market's worth about maybe $50 billion this year to NVIDIA. Like $50 billion. And they said you can assume that maybe they're going to expect to grow, by 50% a year thereafter when we see this new renaissance. I think, as he said it, that we're going to the next industrial revolution. And we'll talk about that. And I really think that maybe people are, underestimating what's going on. They did get $620 million revenue of H20. They had some H20 inventory that they sold outside of China. They mentioned that as well. They returned $10 billion to shareholders through dividends this quarter and share repurchases, as we talked about. And we saw there a little bit of that on the statement of cash flow. And again, this is huge. Like, this might be second best to Apple ever. They approved another $60 billion share repurchases to add to the remaining $14.7 billion. So that's really going to boost EPS and the amount of money that they're generating. Geez, I guess why not? They expect $3 to $4 trillion in AI infrastructure by the end of the decade. So that's something that you gotta kind of keep in mind. NVIDIA, it's kind of crazy. It's $4 trillion market cap, right? But I don't know. This amount, it's a large amount, and it might be something that is understated. We'll see, right? In terms of their guidance, again, strong guidance. Revenue, they're expecting next quarter $54 billion plus or minus 2%. Keep in mind, we were at 46, so we'd see that real, we're still growing sequentially there. So that would be $7 billion in sequential growth. And again, like we talked before, that's no H20 shipments assumed here. right? Gap gross margins about 73.3% plus or minus 50 basis points. So again, that would be improving gross margins. So I mean, that's something a lot of people might think that NVIDIA is like peaked, but even though they're like really rolling out, and there's a lot to this company, you know, you look at the amount of expenses they have in Blackwell and stuff like this, they're still having phenomenal gross margins. So, in my opinion, you know, I did buy this stock a while ago. You know, some people might laugh that I bought a little bit late, but I think people are really underestimating what AI is going to be. I don't think a lot of people understand. And I don't think a lot of people understand even when this goes into humanoid robots, these types of things. Like if you've used, you know, some of the AI, you know, models we have right now, they're not perfect, obviously, but what they can do is phenomenal. And I think we're just like at the first inning, essentially. And that's, you know, what Jensen thinks, the CEO thinks as well. And I think a lot of the general public doesn't understand what's happening. And we're seeing a lot of these hyperscalers that you see, like Meta, you know, all these different companies are putting out massive amounts of money. You're going to see, you know, other businesses get on board as well once basically, you know, the people that are outside the tech space a little bit realize what's going on. Now, of course, there's risks, right? We got AMD. I own a little AMD as well, coming in, undercutting them potentially, right? We're going to maybe see more pressure on the gross margins. And one of the biggest, you know, risks I see is potentially, you know, Taiwan, that type of thing, right? But that's been going on for a long time. So we see these long-term risks that are there as well. But in my opinion, and this is just my opinion, guys, it's too big of a risk to stay out of it. And yes, we've seen a huge run in NVIDIA and like a massive run. But even at these valuations that I think are a little bit suppressed because of all the geopolitical stuff going on right now, I mean, it's too big of a risk. It's too big of a risk to stay out for me. So that's why I got in. And I think this is easily a 200, you know, 200 plus stock. The question is just when, right? So anyway, I'd love to know what you guys think. I'd love to know what you guys think about the quarter. What's your opinion on what's going to happen in China? I have a feeling that they're basically going to do some sort of H20 chip, you know, augmentation a bit, pay that revenue, probably raise the prices in China and get it in there, but it might be a while. I'd like to know what you guys think about that. Or do you think that that's going to be just off market, you know, out of bounds, so to speak, for the next little bit? So don't forget to like the video, guys. Subscribe as always, and I will see you in the next one.